Hello guys, this is ObaFX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities. And today we're going to be looking at Forex currency pair GBPNZD, which stands for the Great British Pound paired against the New Zealand dollar. Analyzed this market sometime last month, and from our analysis, the market went ahead as predicted to do over 400 pips. So for those of us that haven't seen that video, you can check the channel for our previous analysis. As you all know, I do my top-down analysis using pure price action trading strategy, and currently I'm on the monthly time frame. And for those that have been following my analysis, the monthly time frame, what we basically try to get is the direction of the market, aside also drawing our key zones. If you are not so good with how to draw those key zones, I have a video dedicated to it as well on the channel. You can quickly check it out. So we have our key zones mapped out. So the next thing to do on this monthly time frame would be to get our directional bias. Where do we think the market is going to? And this seems to be quite straightforward because this market has been in an uptrend for some time now. So we'll say that our directional bias would be that the market is still going upwards. So when I mean an uptrend, I can easily place a trend line here. You can see that this bounding trend line has been rejecting price for quite some time. Let's not forget that on the monthly time frame, each candlestick here represents a whole month. And if I'm to use this tool to also show us, we can say the market has been making a series of higher highs and higher lows. Let me do this properly. So we can see the market has been making what? Made a higher high, a higher low, a higher high, higher low, a higher high, a higher low. And the market currently broke out of what I'll call a mini range. And to show that range, if I'm to zoom in, so from our previous analysis, I had the market had been playing within this place. Let me do this. So, like I said, each candle here takes a whole month to form. So, for 1, 2, 3, 4, 5, for 6 months, the market was just moving between this support zone and this mini resistance zone, and finally broke out and gave over 400 pips in profit as predicted in our previous analysis. So, having gotten this that are directional, so our directional bias is still that GBPNZD is going up. I believe that the target is gonna be this next resistance zone, and as you can see, we still have a whole lot of space for it to go upward. So it will be the perfect pair to keep pumping in buys as you get the opportunity to do so. But the next thing for us to do is not for us to start pumping in buys on the monthly time frame. We do not take our trades on the monthly time frame, but we'll go to the weekly time frame where we try to get a structure of the market or a chart pattern of the market to work with. As you can now see, the market structure is now much clearer. Like you can see the highs and the lows clearly printed out, and of course the meaning range that the market was in for quite some time. So you can see finally broke out, made a retest, and it's upward. So if I'm to zoom in, the structure that I can see here, if I go to the line chart, is a simple bullish structure. You can call this a W. Also, I can take it as a W pattern where I'll be expecting price to come back here into this zone. So I'll be expecting that if I have a video on the channel also on how to trade W pattern properly. So you can always check that out. But basically what it entails is that we have a W, so we expect price to come back to the neckline, or as in some cases, price can even break beneath the neckline and then move upward. So long as this level is not taken out completely, then the pattern remains valid. So like I said, there's a video on the channel dedicated to how to trade this particular pattern. So if you're not so conversant with it, you can check it out. So having seen this structure to work with, if we go back to the candlestick chart, that simply means that because this particular market already made a new high, we're expecting what? A retracement into this area. And by so doing, for those that have been following me for some time now, you will know that I prioritize three basic tools when it comes to my analysis: the trend line, support and resistance, as well as the Fibonacci retracement tool. So even with this structure now, from this swing high to this swing low, I can even add my Fib tool to see how much retracement we already have. And voila, from what we can see, you can see that the Fibonacci retracement golden zone, which is the zone between the 50% and 61.8% mark on, I call it the golden zone on the Fib tool because it has a history of having a high or having the highest probability of rejecting or supporting price depending on the market we are dealing with. So you can see that if I go back to the line graph, it aligns clearly with the neckline of the W chart pattern that we saw. So this gives me more confidence that this zone is going to be very, very important when it comes to us taking our trade or waiting for the retracement of price. So let's go back to the candlestick chart. Now on the candlestick chart, I can decide to label this. I call it the golden zone, so it only makes sense to label it with a golden color. So now having all this, the next thing I'll have to do now, I can include my trend line as well from this. Of course, this will be my first. Because I still have a whole lot of space inside, I can have like another internal trend line. So I can take this out. And then I can now go to the daily time frame. So the daily time frame, I call it the tradable time frame. I call it the tradable time frame because this is where we can get the most recent trend of the market. So this is where we can start looking for opportunities to take our trades by going to maybe the hourly or the minute time frame. So from what we can see now, it simply means I can still have a trend line here. So our confluence is almost set. I have no need of this range that I had from my previous analysis. I like to make my charts as clear as possible. Now, let's not forget that from the monthly time frame, we saw a whole lot of space for this particular GBPNZD to move upward. So I can take this out also, which I use in mark showing our W pattern. Not that. Let's take this out and then put my Fib tool back again to make it much more clearer and visible. So from this our tradable time frame, we can see that our confluence is all set. So we have our Fibonacci retracement with the golden zone mapped out. We have our trend line, our most recent trend line with price making a first touch, a second touch, and then we're expecting price to retrace into our golden zone where it will also be making a third touch of the trend line before we start looking for what our trading opportunity. So even if I'm to go down to the 4-hour time frame, you can see the downward movement of this particular pair. So like I always say, patience is key when it comes to trading. How would I approach this market? Or like I always ask, how do we take advantage of this setup? The best thing to do would be to wait for this continuous movement of price, this lower low and lower highs that is creating. So when price comes into this place, we can start looking for a change in structure or character of the market. And when we get something like this, then we can what take our what buy trades upwards. And if either you are doing this on the 4-hour time frame or you can go to the much lower time frame to refine your entries. Another way would be to add this counter trend line. So let's say this trend line now continues to push price downwards, and you can see that then you now have like a double confluence with price breaking out of the trend line, coming back to make a retracement of either this neckline or could even come back all the way down, and then you can take your what your buy trade. So this is a simple and clear enough analysis of GBPNZD. So this is what I'll be looking at closely this week. And of course, once I'm able to get my entry confirmations, then I can take my buy trades with my stop loss beneath this Fibonacci retracement golden zone. But like I always said, there's nothing absolute in the market. The market, it's also possible we have some manipulation or some news or something in the market that will cause this trend line to break. And if that happens and there's a retest, there will be probably maybe in a less probable manner a retest, then we can look for sell opportunities down to this trend line. But like I always say, they say the trend is your friend. It's always good to go with the major trend of the market. So if you are not very skilled, just wait for the buying opportunities in GBP NZD because it has been going up for a while now. So this is my own opinion or my own analysis on GBP NZD. Like I always advise, you can compare this with your analysis anytime you come across this video this week and see if it makes sense. And if you are coming across this video or this channel for the first time, I'd like to plead with you that you click on the subscribe button and help me to grow, as I believe I'm putting value out there. Because I just checked last week my YouTube analytics, and it says that over 87% of people that watch my videos are not subscribed to the channel, and I don't think that's fair. Please help me grow my channel, help me grow, help other people to see this amazing style of analysis. Like I stated from the start, this is a trading academy. We started our October classes Wednesday last week. So if you want to take your analytical skills to another level, you want to learn how to do this yourself without depending on anybody or relying on trading signals, you can always reach out to me via the details on my YouTube bio so we can talk and work something out. Enjoy the rest of your trading week and have a wonderful week ahead. Cheers.